The IPO price range is swiftly left behind, as NCLH has a bullish start that eventually stalls, at record highs focused around the lower 60s. A strict double top completes successfully and is not hindered by drastic volatility after January 27, 2020. Since there is no delay in closing under the lower boundary defined by the 56 range, soon after, a series of bullish retracements provides the basis for a helpful pair of downtrend lines. Here is a stable bullish reversal from an inclined triple bottom range. That is essentially an ascending triangle outline in a bullish reversal context, due to the 17 level forming a new perfect horizontal resistance range for the upper boundary. This could be extended to 2015 due to the peak in late March, but it is more precise to use 17 since it neatly encompasses the real bodies of downswing candles that had high volume. There were two main variations of the triple bottom more closely approximating the outline of an ascending triangle, depending on how the uptrend lines were defined. In any case, the bullish effects were lessened due to the influence of the long-term downtrend lines, along with a bullish overextension in June at the contentious 24 to 25 range. As resistance continues into the mid-20s into the new year, the gap range marks a key long-term threshold, with the old 2015 to 17 range conveniently reused, while the lower uptrend line provides a general guide to estimate when support potential could be increased.